Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
The number one reason people struggle to close deals is because they don't have enough money. And that's because they don't have enough passive investors waiting on the sidelines, itching to get in. Is this you? The only way to fix this is to flip the script so that instead of chasing money, money chases you. By flipping the script, other syndicators raise all the money they need in 48 hours or less. How do they do it? They apply the techniques that you'll learn at the virtual Raising Money Summit on October 1st through the 4th. Adam and his team are pulling back the curtains with top syndication experts to share their secrets, systems, processes that empower them to never struggle raising capital ever again. And you can learn this from home while watching online. Are you ready to start learning how to attract millions of dollars for your next real estate deal? Listeners get a special pricing of only $97 by texting Whitney to 55444. That's Whitney to 55444. This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today our guest is Eng Taing. Thanks for being on the show, Eng.
Thanks for having me, Whitney.
Eng is the CEO and founder of Touzi Capital, an investment company focusing on high cash flow assets in Kansas City. He's a classic immigrant story, born in a refugee camp in Thailand, escaping the Khmer Rouge and finding success in data and math in America. He is a working graduate economist, former Peace Corps volunteer, and ex-Apple data scientist turned real estate investor with a $65 million portfolio, finding financial freedom at age 35. Eng, thank you so much for being on the show. Grateful for your time. I'm looking forward to hearing just your amazing journey and just how financial freedom at 35 is something most only dream of, and you've come a long way to find it and been very successful. So, give the listeners and myself a little more about your background. We'd love to hear your story and just inspire all of us, I'm sure.
Well, thanks for having me on again. My story is I think unique, but not too unique for an immigrant. My parents I'm Cambodian. My parents are born in Cambodia, and during the late 70s, there was a cruel dictator named Pol Pot, and I think after the Vietnam War, he was toppled out. But they conducted a pretty brutal regime, and they targeted intellectuals and Chinese Cambodians, which is normally what my ethnic background is. And so I, of course, didn't suffer through all that. I was a baby, but I was born in a refugee camp in Thailand and immigrated here when I was 2. And unlike some other Asian immigrants, my parents didn't even have a high school or grade school education. So my motto for success was folks, like my parents, that worked and hustled 7 days a week and did things very entrepreneurial. Now they told me to not do that, because if you're struggling and you're working very hard, you tell your kids to find security. And so they made me work for education as my primary job. And I was pretty good at it, and I tested very well, and I was really good at math. And in fact, I actually day traded in high school, and I paid my way for Wharton and Penn, studying economics and finance, day trading, and then playing poker. So I was pretty good at math. Yeah, and so after going into economics and finance, and really my driving motivation was helping lift my parents and my family out of poverty. And I grew up on welfare stamps and welfare in general. And it helped me gain a hunger, I think, that my peers didn't have. And as soon as I started making money out of college, getting into investment banking, I invested it in the financial markets. And then the financial markets took a dive a few years after that in 2008, 2006, 2007, 2008. And I realized that real estate was a much safer investment, and real estate was 1/3 the cost of what it was 2 years ago. So I started buying real estate after that. But that was part of starting my investing journey. But after being in investment banking and financial markets, I went to Peace Corps. It was another decision that my parents would not be so happy with, and because they were left a war-torn country, and I was going to volunteer at another war-torn country. This was in 2009, right after Russia invaded Georgia. So I went to be a volunteer in the Peace Corps at the Republic of Georgia a year after Russia invaded. And there was landmines everywhere, there was shells, and there was refugees as they annexed part of Georgia, Abkhazia. But it was a really cool experience, helping people out, bringing sort of what I knew, help with their development in their community, and just living in another culture. And I actually met my wife there. She's not Georgian. She's actually from Ohio. And as soon as I heard another American voice, it was like, wow, it was like serendipity. So that was a really cool experience. And, we moved out together and then moved back to Los Angeles, where I had to reingratiate myself into corporate America. And because I was in Peace Corps, you're making $200 a month. And that doesn't cover housing. So you have to pay for your own housing. Luckily, housing is very cheap there. But your Peace Corps experience is really about adaptability and flexibility. And I learned that in spades. And so going out of finance, getting into gaming, which is the next industry I went into, was a really cool experience because I love playing games. In this case, I joined Riot Games, and I worked on the game League of Legends. Potentially some of your listeners have heard of that. Very popular game. And I've been focusing a lot on analytics and data and understanding behavioral patterns of how, in the financial markets, how people consume and spend and what we can loan to them. That caused a subprime mortgage crisis a little bit, so apologies for that. But in gaming, it's all about understanding people's behavior on the gameplay and how to optimize it and make it a more rewarding experience. So it's a really cool transition, still using data and analytics and data science. And I just kept moving on to the next industry, direct TV, where I got a window into how everybody consumes media. We negotiated for NFL Sunday Ticket, and we understood how many subscribers we could get because people really want to watch NFL Sunday Ticket and Red Zone. And that's a lot of understanding people's viewership patterns. By the way, all this time, I'm still investing in real estate. In fact, even in Peace Corps, I was buying apartment buildings, triplex and quadplex in 2009, 2010. And then finally, I left DirecTV, AT&T after AT&T merged with the company to join Apple. And I worked on iPhone forecasts, which is very important because if you over forecast, then you have too much supply. If you under forecast, then you're not developing the factories at a capacity where you have shortfall, and then you have long wait times. And if you have long wait times, that could be seen as a good thing for, oh, cool, there's a lot of people wanting it. But then a consumer might want to then buy another competitor's phone because they don't want to wait 2-3 months to get the latest iPhone. And then I joined Apple Music within Apple, and I helped launch that and grow subscriber base by several tens of millions. And then finally, I led data science at Siri, where it's really cool to get trillions of data of information, understanding the whole interaction with an AI, and trying to make it more usable and a better experience. And all the time, by the way, I'm still investing in real estate. And for the last 3 years, I've been buying bigger assets because I realized my time is very valuable. And buying 3 triplex and quadplex does take a lot of time, and managing it takes a lot of time. And so I started to passively invest in other people's syndications, and then I started to buy it myself as I got more funds. And last month, I left Apple, and now I'm doing this full time. Although I've been doing it for several years now, but this is I am financially free enough to do this full time, and actually have 1 kid on the way. So it allows me to pursue my passions of family, family and real estate.
Wow. Amazing story. I mean, it's amazing all the things you've accomplished, everywhere you've been. But then in addition to that, you've been investing in real estate at the same time. And I wanted to go back a little bit and say, like how did you first build even the wealth to start investing in real estate, and what was the first say piece of real estate? What was that? What was your desire? What was it that you invested in first?
I save a lot. I struggle still, even with the income level I have, the wealth I have, to make a decision on a $20 meal versus $10 meal. Imagine me at 21 years old, having an investment banking income and still struggling on a $4 or $5 meal. So I saved. I'm a prodigious saver. I've been always that case. My first deal was a short sale, and I went to the sellers directly to the listing agent. In fact, I've never bought real estate with an agent. So I've always went directly to the listing agent and tried to get a good deal from that perspective. And it was $126,000. We put 10% down and then I lived in it a little bit, not the whole time, just to qualify for a really great rate. And then I still hold on to it. In fact, it generated 13% cash flow. I rehabbed it. I refinanced out of it. It was a triplex in Southern California, back when Southern California was affordable. Can't remember those days anymore. But it was generating like 10 to 12% cash flow. And then I refinanced it 8 months later, took the equity out, and bought another thing.
Wow. Good for you. During that time when you were doing all the traveling, you were volunteering, how were you paying your way then? How were you still investing in real estate and surviving while doing that?
A lot of it was really conservative, just optimizing my capital, understanding where my capital is going. I'm not one to do a personal budget, but I do a P&L for my entire network. And understanding where my capital is unoptimized. Am I making 5% here? Do I have a mortgage that I'm paying 3% on, but I have equity that I could tap, and I could place it into something that yields 10 to 12%. So it's a lot of work to actively do that. It's probably easier to just buy something and just, let it accumulate, let it cash flow, and not have to refinance and not have to re-optimize your capital. But it's worthwhile especially when you're starting out. I don't know if I would do it now to the extent that I did it in the past, but it helped me really accelerate my investing.
Nice. Well, you started investing passively. What kind of deals were you looking for when you became a passive investor? I mean, and what was your thought process again there, as opposed to just continuing to invest actively like you had been?
One of the things I really wanted to do was learn about this whole space. And I invested in folks that I potentially could learn from. Not everybody had the time for me to bug them all the day, and I'll talk to anybody about any topic, and I'll hopefully learn a lot from them, whether it's a property manager or even a groundskeeper. And I was lucky enough to invest with a few folks that were open to sharing their experience and understanding of how they did it. I think I'm pretty good and I have a good background in real estate investing, but real estate syndication and the investment company business is actually the thing that has been a great learning experience for the last few years for me. And that's what I've been building towards.
So investing passively, but then you started, or you got to the point where you could buy your own assets, larger assets yourself. Talk through that a little bit and why you would do that as opposed to just continuing to invest passively.
That's a good question. And I think it stems from my need to want to learn as much as possible. And there's just a limit of how much you could learn doing it passively. And the returns are pretty good. I invested in multifamily. I invested in some commercial deals that had high returns, of course, higher risk. One thing that I wanted to do was deploy my capital as efficiently as possible as I was refinancing my properties. And I think of all my properties as bank accounts, and should always consider how much money you have in the bank account. And if it's generating 3% or 12%, then deploy it wisely. And so refinancing a couple of my California properties, I could have deployed into passive, but I wanted to really go into this headlong, and I bought my first apartment building at a much larger scale. And I actually took the time to then just create a pitch deck. And this wasn't, my intention was never to syndicate this. It was just, hey, I just want to pitch it to my family and say, hey, this is what I'm buying. Obviously, you're not investing it, but like, this is like why this is a good deal. And actually I posted it, a friend found it and asked me for it. And then he said, hey, I have some investors. Can I place $800,000 with you? I'm like, whoa, okay. That's like almost all the money I need. I ultimately wasn't ready for that. And wasn't ready to take other people's money. I really wanted to know and understand it as deeply as I needed to be at comfort level, to be responsible for other folks' money. But it made me understand that there's a lot of people like myself and my friends and family who didn't know these things existed, and they've heard of me talk about real estate a lot and the cash flow benefits and tax benefits, but they didn't know where to start. And so then I realized it just clicked. I should just be that conduit for folks. And that's what Touzi Capital is. It's an extension of me wanting to buy things. I want to buy everything I buy, I invest in. I think of it as my personal assets, and I keep that high bar of investments. I make offers all the time. In fact, I made 4 offers this week, and I decline on all of them because my bar is very high. But then it's more about sharing and being open and allowing, and helping some of my investors and my partners to, enjoy the returns that I've been getting.
Wow. Well, Eng, you came from absolutely nothing. I mean, I think it helps put things in perspective. I think for the listener and myself, you came from absolutely nothing, but you accomplished, financial freedom by 35. What were, if you had to give the listener just a few key things that you did to make that happen, that that could help them as well, what would that be?
I have led many lives. I think I probably should write a book one day. I have pictures of myself chasing chickens in a dirt cap. And I don't think, I was afforded a lot of the education opportunities early on. But one thing that I've learned through my, early struggles was to be adaptable and flexible. I think if folks go into something with too strong of intention, you need a North Star to guide you. And my North Star was helping my family get out of poverty. And once that happened, I was kind of aimless. And then my North Star was having a family myself, and having a wife that I was responsible for, and having a kid that I was responsible for. That really drove me. But you have to have a North Star, but you have to be flexible in your journey. And if I wasn't flexible, I would have just said, I want to be in finance. I want to just be stuck in real and do this investment banking thing. It could have been very lucrative. People stay in one place for a long time, but if you're not adaptable, you're not open to potential other opportunities that could be life-changing. You could meet your wife in Peace Corps. You could invest in something that you have no idea how to invest in, or you have to take a leap of faith. But the adaptability and flexibility is going to help you a lot in both your investment career and your professional career.
Great advice. Wow. Adaptable and flexible. It sounds like when you say North Star, it sounds like kind of like a lot of people now call it your why, or, what's driving you, right? And flexible in your journey. Great example as well. Even like when your friend brought 800,000 to a deal, you had to be flexible.
Yeah, I was like, okay, maybe I should talk to a lawyer and figure out how to syndicate. I was like, all right, I'm going to talk and figure out what this SEC regulations are. But I was closing the property in like 40 days. I'm like, I don't know if I have time. And I was like, I'm going to just buy myself. But like being flexible means being open-minded to opportunities. And I'm always open-minded to opportunities. And a lot of that is now for me an abundance mindset of the fact that it doesn't just have to be me. It doesn't have to be just for me. I can grow the pie with partners, and I can be generous with partners and create these long-term relationships. And that's one of the models I've really found successful. I love to partner with people. I can't do all this myself, and I do this with local partners. And it's something that I like to be generous with because these are long-term relationships. And in real estate, as you know, it's very much a relationship game. There's a lot of math to it, but the math is rather simple once you figure it out. Then it's just relationships and who you know and who gets the first call when something's on the market.
Well said. Eng, what's been the hardest part of your real estate journey to the point you're at now?
The hardest part was managing things remotely. Even when I bought in Southern California where I grew up, I was living abroad and trying to figure out ways to do it in a process. But I highly recommend for folks to try it, even if they live where they invest. Try to manage your property remotely, because it will pay dividends. That's a skill set that allows you to scale up, that allows you to be free. Financial freedom and time freedom goes hand in hand. And if you have financial freedom, but you're still stuck on something, you don't have time freedom. And so being able to learn about that part and struggle with it, admittedly, initially, and realize that buying triplex is really difficult because one tenant is really hard. And then you can't evict people in California without a long lead time. And it's just very hard in general to invest in real estate in California. I highly recommend it if you're in 2000, but 2020, not a good idea. So learn how to scale and make process your friend. It will pay dividends for the future.
How do you prepare for a downturn, or how do you, or have your the way you prepared, has that changed?
I'm very conservative in my underwriting. I assume the worst will happen, and so far I've been surprised that things haven't happened. I'm a buyer in this market. I'm buying a 426 unit apartment building right now. We're closing this month. I just finished the capital raise, and
where's that at?
It's in Kansas City.
Oh yeah.
And I assume the worst will happen. I don't assume any rent increases. I don't assume any of the things that I would probably assume before. And if things go better, which I hope it does, then I will delight my investors. You want to under-promise, over-deliver. And then you have a really strong buffer. If you're living on the margins and the edge of your underwriting, of your analysis, then you will be stressed more than you want to be. And it's not worth it to be that stressed. And so living through that buffer allows me to sleep easier at night, but also know that it was a good deal to start with, and it could be a better deal if things don't turn for the worst.
So when you're, as far as being conservative, so you're saying that you're calculating no rent increases for the life of the deal. Is that right?
I'm calculating no rent increases for the next 2 years on lease on in-place tenants. I'm calculating marginal increases where there's a market gap, and then where I add a little value add.
Nice. Nice. Any other ways while we're talking about it that yeah, you're a conservative, but a lot of people use that word. And so I just love to hear a little more in depth about what that means to you.
Conservatism means you aren't putting all your eggs in one basket. And conservatism also means diversification. So buying this latest deal, I'm buying 3 apartment buildings, and they're slightly different areas. And so you have a little bit of diversification in the area. When you buy more and more stuff, it actually, you're being more conservative, actually. It's actually counterintuitive to what people think when you buy more in something. You will be tied to American real estate, but American real estate has a really long legs and success, and every market is very different from each other. California is very cyclical. There's a lot of other markets that are cyclical. I love steady markets that don't have that same cyclical. I'm not going to gain the most in boom markets. I'm not going to lose the most in bust markets. So that's how I'm a little bit conservative.
Nice. And what do you predict happening over the next 6 months to a year or longer in the real estate market?
So a few of my predictions have not come true. So I don't know how useful this is, because my stocks have gone up a lot, and that was surprising. The Fed injection into real estate markets, and just liquidity of assets in general, is inflating things. Financing is harder, but it's cheaper. It's creating higher credit risk yield spreads, making pricing for real estate, at least stable real estate, still pretty good. I think a lot of the current rental market right now is being buffered by the huge stimulus injections, and that's still apparent, even though it was quite a while ago. I think in Q1 is when you're going to see some struggles, and that's going to be namely in markets that have really high rents that have been going up for the last 4 or 5 years. San Francisco, there's a lot of people negotiating 10% rent decreases. And if you're investing in San Francisco, then your DSCR is very thin or negative. And so you need any cash flow to maintain, because you're also paying out of your own pocket. So if you're investing in high DSCR places, you have a little bit more buffer. And so I can see real estate prices not necessarily going down because financing is so cheap. But in general, I do see rent collections struggling more and more. And then I think around December and January will be a zenith. I do see I'm not a scientist, a vaccine happening in the winter. Now it's not going to be produced massively and distributed, but people always think of the future, especially in markets. And so as soon as that gets announced, people will start transacting again.
What's a way you've recently improved your business, your syndication business, that we could apply to ours?
I think one of the things I try to do is make it as user-friendly and as transparent to our investors as possible. Our investors are our clients, and the reason why we do this. And if you are I advise everyone to invest in other people's deals, because you can see what's good and bad about how people communicate and how they manage their investors. I love to be as transparent and accessible as possible. And I love to create an understanding for my investors to see how their assets is doing. So for me, I actually put cameras in place, and I put live reporting, and I put daily, weekly videos of how the assets are doing. I'm not necessarily doing myself, but my property managers are, and they're giving really good feedback loop. Then we use a lot of interesting app-based solutions for investors to check out what their portfolio is doing. Because I think of it as a portfolio. We have a lot of repeat investors. So if you're still working off email and Dropbox and Google Drive, try to look at some novel approaches to it. And there's a lot of new investment investor management solutions out there. A lot of new startups coming up with these great technology. Look into those. They're not that expensive, but they're very worthwhile.
Is there something you can recommend specifically that's worked for you?
So we use Juniper Square. It's a pretty expensive. It's mostly used by much bigger syndications, but it allows people to just one-click things very easily. They can see the whole investment doc, and it's the closest facsimile to just having an E-Trade account or a Fidelity account. And I think that's what I'm trying to create, a financial instrument of sorts, because real estate should be seen in akin to other financial instruments, stocks, mutual funds, etc. And if you can make it feel like that, then it's doesn't seem as risky to investors.
What's your best source for meeting new investors right now?
It's referrals. I do not go out anymore, and I have these Zoom calls all the time. The last few days, I've had 5 new investor calls, and all of them have said, "Oh, my friend told me of you," or this. So try to treat everyone you meet with kindness and provide value, whether they invest with you or not. I think that's going to pay dividends. You're planting seeds for the future.
What's the number one thing that's contributed to your success?
I think the number one thing is my family. I have a family that is very supportive, but also that I really want to provide for. And that has given me a huge motivator. It makes me wake up really early in the morning and sleep really late at night, and have a strong passion for this.
Eng, how do you like to give back?
I love mentoring people. That's one of the things that gives me a lot of energy. Even though I'm not as experienced as potentially other folks, I love just bringing people on to my team. If they have other skill sets, that's great. In fact, I actually work with people who are software engineers, because that's my background, and they help me with website design or other parts of the business. In exchange, I help them understand and get into the real estate investing world. And if they're passionate about it, I love working with other people who are passionate about things. It gives me a lot of energy.
Wow. Eng, well, you have an amazing story. I'm so grateful for your time and to have you on the show. I know it's inspiring to the listener and myself, and just your entire road to getting to financial freedom, but then just your success in real estate even after Apple as well. So just grateful for your time. Tell the listeners how they can get in touch with you and learn more about you.
Yeah, please go visit my website, Touzi Capital, TOUZI capital.com. Touzi actually means to invest. My wife came up with that name. So it's a really cool way to think about it, invest capital. And feel free to reach out to me at Eng, E-N-G, at touzicapital.com. I'm also going to be launching a new education platform called Financial Freedom Decoded. The site's already live, but my content's not there. financialfreedomdecoded.com, where I provide sort of the blueprints to decode financial freedom, at least the way I see it.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.